Hey, it is Troy Stavros with Cornerstone Realty Associates here in Knoxville, and it is time to go over our monthly market update. Going to look at all the data through the end of May and see how things are looking in East Tennessee and Knoxville. Let's jump in and take a look. Starting in East Tennessee, we're looking at May of 2025 versus May of 2024. Year over year, home sales are down 10.3% compared to a year ago in East Tennessee. This is looking at the entire East Tennessee area. Inventory of homes is up 38.2%. Pending sales are up 13.9% through the end of May. New listings were up 9.6%. The median sales price in East Tennessee was up 2.14% and came in at $372,825, with the average sold price per square foot in all of East Tennessee coming in at $221 per square foot. The absorption rate increased from 4.16 months worth of inventory up to 4.43 months worth of inventory. Let's jump over and take a look at what happened in Knoxville. So this is everything with a Knoxville, Tennessee address. So comparing May of 2025 to May of 2024 in Knoxville, home sales decreased 10.8%. The inventory of homes increased 57.5%. Pending sales were up 13.6%. New listings were up 11.8%. The median sales price in Knoxville was up 2.07%, coming in at $407,500, and the average sold price per square foot in Knoxville came in at $239 per square foot. The absorption rate increased from 2.44 months worth of inventory up to 2.63 months worth of inventory. Let's take a look at the data here and analyze East Tennessee as a whole and Knoxville proper. That's everything with the Knoxville, Tennessee address. Let's compare the two and see what is happening in both of these markets. Summary of what is going on is there's a unified shift. So the real estate markets across East Tennessee and its primary metropolitan hub, Knoxville, are sending the same clear signal. The area of frenetic sellers market is over. Data through May of 2025 reveals a decisive shift towards a more balanced and in some ways more traditional market environment. Both the regional and city-specific reports show a market characterized by surging inventory, a slower sales pace, and moderating price growth. This has collectively tipped the scales, moving leverage away from sellers and towards buyers. However, while the direction of the market is consistent, the velocity of the change differs. The Knoxville market is experiencing a more rapid and dramatic cooling off period than the broader East Tennessee region, presenting unique nuances for those looking to buy or sell there. Let's dig in a little deeper. Let's look at a comparative market analysis with similarities and differences between East Tennessee as a whole and Knoxville. First, market similarities. Regional cooling trend. The overarching narratives for both East Tennessee and Knoxville are remarkably aligned. This indicates a widespread regional market correction rather than an isolated event. Number one, surging inventory is universal. Both markets are seeing a significant increase in the number of active listings. This is the primary force driving the market change, giving buyers more options than they had in several years. Second, the sales pace has slowed considerably. Homes are taking longer to sell across the board. Both reports show substantial year-over-year increases in days on the market and the absorption rate. The quick multi-offer sales of the past are becoming the exception now, not the rule. And third, seller expectations are being reset. In both Knoxville and the wider region, sellers are adjusting to the new reality. Sold to list price ratios have dipped below 100%, and list prices are either declining or showing negligible growth. This confirms that buyers have regained negotiating power and sellers can no longer command any price they wish. Now, how about the market differences? Knoxville has had an accelerated shift. While part of the same trend, the Knoxville market is a more intense microcosm of the regional shift. The data shows that it is cooling faster and more dramatically than its surrounding areas. First, let's look at the pace of the slowdown. The most telling difference is the rate of change. First, the absorption rate. Knoxville's absorption rate skyrocketed by 51.15% year over year. The broader East Tennessee region saw a significant but smaller increase of 35.89%. This shows that the gap between new inventory and sales is widening much more quickly in Knoxville. Second, let's look at days on the market. The typical home in Knoxville is staying on the market much longer percentage-wise. The median cumulative days on the market in Knoxville surged by 71.43%. from 7 to 12 days, while the regional median increased by a more moderate 42.86% over the year from 14 to 20 days. Now, there is market balance. The broader East Tennessee market has an absorption rate of 4.43 months worth of inventory, and it's now operating within the range of a traditional balanced market, which is 4 to 6 months. Now, Knoxville, despite its rapid cooling, has an absorption rate of just 2.63 months. This means Knoxville is technically still in a seller's market territory, but it's heading towards balance at a much faster speed. It started from a hotter point and is correcting more sharply. Now, there are pricing nuances. The sales price. Knoxville's average sale price grew by 7.43%, more than double the regional average of 3.55%. This suggests that Knoxville's higher-end market remains strong, pulling the average up. How about list prices? Sellers in Knoxville are reacting more aggressively to the changing market. The median list price in Knoxville fell by 5.37%, a much steeper drop than the regional decline of 0.69%. This signals intense competition among sellers in the city's core market. What about unified recommendations for buyers and sellers? This advice applies across the region with special considerations for the faster-moving Knoxville market. Number one, let's talk about first advice for sellers. The market no longer guarantees a quick or above asking sale price. Strategy and realism are keys to your success. Number one, price aggressively and accurately. This is the single most important factor. Overpricing is a critical error that will lead to your home languishing on the market, ultimately requiring price cuts that can stigmatize the property. In Knoxville specifically, with a 5.37% drop in the median list price, you're competing against sellers who are already adjusting downward. Price your home correctly from day one. Number two, invest in presentation. With inventory surging, your home must stand out. Professional photography, decluttering, and ensuring the home is in pristine condition are no longer optional. They are essential for attracting serious offers. Number three, be patient and prepared to negotiate. The days of reviewing multiple offers in a single weekend are fading. Across East Tennessee, expect an average market time of around 60 days. In Knoxville, while the median is 12 days, the 71% increase shows the trend is toward longer market times. So be prepared for a sale to take weeks, not days, and expect to negotiate on price and terms. Buyers have the data and the leverage to do so. How about advice for buyers? This is the most advantageous market for buyers in several years. You're in a position of strength. Number one, take your time and explore your options. The fear of missing out, or FOMO, has subsided. The significant increase in inventory means you can be more deliberate, compare properties thoroughly, and avoid rush decisions. Caveat with that is there are still homes in certain areas of Knoxville that are hot properties, and those will still go quickly and could have multiple offers. So talk to your agent so they can tell you what the demand is for a specific property and how you should negotiate. We'd love to help you with that. Reach out to us. Number two, exercise your negotiating power. The data confirms that sellers are more flexible. Don't hesitate to submit offers below the list price and include important contingencies for inspections and financing. Focus on days on the market. Pay close attention to how long a home has been on the market. A property with a higher than average days on the market, especially in the fast-changing Knoxville market, often indicates a more motivated seller. Number 3, don't mistake a balancing market for a crashing one. While the market is cooling, prices are not in free fall. Sale prices are still appreciating modestly year over year. Waiting on the sidelines for a major price crash is a risky strategy that may not pay off. The real opportunity now is the combination of more choice and reduced competition. If you wait for prices to fall, you may be waiting for a long time. Projected market conditions. What do we see happening in the future? Well, the market transition observed through May of 2025 is expected to continue and solidify over the next 6 months. The defining characteristic of the second half of 2025 will be market normalization. The trends of rising inventory, longer market times, and moderating price appreciation will persist. External economic factors, primarily mortgage rates, will be the most significant driver of market activity. While a dramatic drop in rates is not anticipated, any stabilization or modest decline will likely encourage more buyers to enter the market. Overall, the market will firmly favor buyers more than it has in years, requiring sellers to adapt to a more competitive landscape. Let's look at a detailed 6-month projection, June to December 2025. Inventory and market pace, there's going to be more options and slower sales. First, inventory will continue to rise. The trend of increasing active sales that was seen in the first half of the year will carry through the summer and into the fall. This will be driven by 2 factors: new sellers listing their homes and properties taking longer to sell, thus remaining active for an extended period. The lock-in effect, where homeowners were hesitant to sell and give up low mortgage rates, is expected to wane as rates stabilize. Second, seasonal slowdown will be more pronounced. Real estate typically sees a seasonal slowdown in the late fall and early winter. This year, the effect will likely be more noticeable than in the recent past. The combination of higher inventory levels and typical holiday season distractions will lead to a significant drop in sales activity toward the end of the year. Third, days on the market will increase. The sharp year-over-year increases in days on the market will continue. Homes listed in the second half of the year should be expected to sit on the market longer than those listed in the spring. This metric is a clear indicator of the shift from a seller's to a more balanced market. How about pricing and negotiations? There will be a return to normal. First, price growth will decelerate. While a market crash or significant price drop remains unlikely, the rate of appreciation will continue to slow. Projections for the East Tennessee area suggest modest annual price growth in the low single digits, around 2 to 3%. Knoxville may see slightly higher appreciation due to its strong underlying economic fundamentals, but the double-digit growth of previous years is firmly in the past. Next, seller concessions and price reductions will become commonplace. The gap between the original list price and final sale price will widen. Expect to see more sellers offering to cover buyer closing costs, pay for home warranties, or formally reduce their asking price after a few weeks on the market. The days of multiple offers significantly above asking price will be rare. Next, mortgage rate influence. The trajectory of mortgage rates is the biggest variable. Most forecasts predict rates will hover in the mid to high 6% range for the remainder of 2025. If rates were to dip closer to 6%, it could spur a noticeable increase in buyer activity. However, the current consensus is for rates to remain elevated, which will keep a lid on rapid price growth and maintain the market's normalizing trend. Projected outlook for buyers and sellers for the second half of the year. Outlook for sellers. The next 6 months will be a reality check for sellers. The strategy of simply listing a home and waiting for high offers will no longer work. Your strongest competition is other sellers. With more homes for sale, your property will be directly compared against a growing number of alternatives. Next, pricing and condition are everything. Your home must be priced competitively from day one and be in excellent move-in ready condition to attract serious buyers. Be prepared for a marathon, not a sprint. You have to adjust your timeline and financial plans for a longer sale process. The outlook for buyers: the remainder of 2025 will present the best home buying opportunity in years. First, leverage is on your side. You will have more homes to choose from, more time to make decisions, and more power to negotiate on the price and terms. Don't be afraid to make an offer. With sellers selling below the list price on average, you should feel empowered to submit offers that reflect the current market conditions. And lastly, affordability remains a hurdle. While you have more negotiating power, home prices and mortgage rates are still historically high, and it is crucial to get pre-approved for a loan to understand your budget before starting your search. Okay, let's look at some of the weekly data. All of that data was through the end of May. I want to always take a look at what is happening right now. This is the week over week data. This is all the data that we're seeing through the end of last week. When we look at this chart right here on the right, this is the last 90-day period. Just looking at the trends, we can see that the median days on the market has been falling over the last 90 days, typical as we entered the spring season. Price per square foot has held pretty flat. Median price of new listings has held pretty flat. Median price in general has held pretty flat. And this is talking about Knoxville, Tennessee. Price decreases over the last 90 days have steadily risen. So we've seen more price decreases. 45% of all of the active inventory as of last week had a price reduction. When we look at the inventory, that again has steadily increased over time. And the market action index, which tells us where we are as a buyer or seller's market, it was steadily rising and it peaked around May 9th and has been coming down since. Around May 9th was when the sellers had the most power, and it's slowly started subsiding there a little bit. That is something to keep in mind. We also want to look down here at the price segments and see what is happening with the price segments. The price segments, often the high end of the market will behave differently than the low end. This allows us to see the trends in the different segments of the market. It splits the market into 25 percentiles. This lowest is the lowest market segment, and obviously up top is the highest market segment, the most expensive. You can see in Knoxville, this is looking at all of the available listings that are currently on the market. For those homes that are on the market, they're averaging $279,900 in the lowest segment. In that lowest segment, that gets you about 1,200 square feet, gets you a 3-bedroom, 2-bath, home about 73 years old on average. Then the other thing that we always want to look at is how many new listings came on the market last week, and then how many were absorbed. That tells us the demand that is currently in the market. So last week, 32 new listings came on the market in this lowest segment, and 47 were absorbed. So there's definitely still demand in that segment of the market because more were absorbed than came on the market. And in that segment, the average days on the market for homes currently available was 35 days on the market. The next segment up comes in at $397,500. That gets you about 1,868 square feet, a 3-bedroom, 2.5 bath, a home that's around 31 years old. In that segment, we saw 43 new listings come on the market, and then we saw 39 of those get absorbed. Decent amount of activity in that segment as well. In that segment, the average days on the market for those listings was 31 days on the market. That is the lowest of the 4 segments. So I would say that is probably showing you that is one of the hottest segments right now. Next segment up averages at $540,000. That gets you around 2,516 square feet in Knoxville, a 4-bedroom, 3-bath, home that's around 18 years old. In that segment, we saw 30 new listings come on the market and 21 get absorbed. And then the average days on the market for that segment was 42 days on the market. And then the highest segment, the luxury segment, that median price came in at $932,450. In that segment, you get around 3,620 square feet, 4 bedrooms, 3.5 baths, a home that's around 18 years old. That segment saw 29 new listings come on the market last week and 20 get absorbed. And the average days on the market in that highest segment was 49 days on the market. Okay, what is happening with mortgage interest rates while we're here? Let's jump over and take a look at that. So as far as mortgage interest rates, as of today, they were at 6.85%, down. We were at 7.8 back in May. You can see it's worked its way down, went back up to almost 7%, and then worked its way down today to 6.85%. That is heading in the right direction, but you just never know because you can see how volatile interest rates have been here this entire year. Let's jump over and take a look and see what happened in the surrounding counties. So when we look at Roane County, available inventory in Roane County was up 28.6% compared to a year ago. Pending sales were up 20.3%, and the median sales price in Roane County was up 2.15% and came in at $332,000, with the median sold price per square foot coming in at $174 per square foot. In Knox County, the available inventory was up 54.9%. Pending sales were up 15.3%. And the median sales price in Knox County was up 3.09%, coming in at $400,000, with the median sold price per square foot coming in at $235 per square foot. In Anderson County, the available inventory was up 55.6%. Pending sales were up 13.9%. And the median sales price was up 1.61%, coming in at $315,000, with the median sold price per square foot in Anderson County coming in at $194 per square foot. In Loudoun County, the available inventory was up 56.3%. Pending sales were up 24.5%. The median sales price in Loudoun County was down compared to a year ago, down 4.27%, coming in at $505,000, with the median sold price per square foot in Loudoun County coming in at $240 per square foot. In Sevier County, available inventory was up 15.9% compared to a year ago. Pending sales in Sevier County were down 20.1%, and the median sales price in Sevier County down 11.62%, with the median sales price coming in at $520,750, with the median sold price per square foot coming in at $280 per square foot. In Blount County, the available inventory was up 39.3%. Pending sales were up 19.7%, and the median sale price was up 6.14%, coming in at $392,735, with the median sold price per square foot coming in at $224 per square foot. We can see here, of the 6 counties that we're looking at, 4 of those 6 are positive in positive numbers, and 2 had fallen into negative year-over-year numbers as far as median sales price. That's really not a new thing for Sevier County. We've seen that bounce around, falling short of the years previous simply because of large amount of investors that are buying and selling in Sevier County and how that has slowed down because of the higher interest rates. It has definitely been affected by that, but we'll continue to watch Loudoun County as that has bounced up and down, above and below. We'll want to see if there is a trend there that stays below last year. But as of May, it was down 4.27% compared to 1 year earlier. Okay, just a couple more things. This graph here is showing the appreciation year over year from the year 2000 until 2025, and it's looking through April of this year. This is showing the appreciation and how it has softened this spring. Seasonally, home prices in most housing markets experience the most upward pressure. Prices go up most between February and July, and the most downward pressure, prices go down the most between September and January. When we look at this chart, which is not looking at seasonal adjustments, U.S. home prices rose just 0.7% month over month between March of 2025 and April of 2025, which is a seasonal window that has averaged 0.9. When you look at that column where it says April and you go down to the bottom and you see 2025 0.7, you can go up that column, and there's only one other place other than when we were in the housing crisis that the appreciation was that low in the month of April. That just shows you how constrained the market is right now because of high interest rates and high prices. It's not just here in Knoxville, it is all over the United States. Things are tightening up. We need interest rates to come down to free things up a little bit. Next, I want to just show you this chart because it's interesting in that it shows what has happened with U.S. existing home sales. And you can see the green box on the chart to the right. That's pull ahead existing home sales during the pandemic. You can see how crazy home sales went during the pandemic. And when it says pull ahead, that means sales were pulled forward. So people that may have bought years later decided to move their plans up and buy during the pandemic for a number of reasons. One, obviously, was the interest rates were incredible. And then also people had the opportunity to work from home. Many people moved to different areas of the country because they were allowed to work from home. So that pulled a lot of buyers forward who bought then, who are not buying now. So the pink box that you see next to it, where you see the big fall off in home sales, sales from this box were pulled ahead to 2020 and 2021, like we talked about. Some existing home sales were lost to sky high switching costs, which means so many people who had locked into low interest rates were not willing to sell their home or put their homes on the market. So there was less inventory. So that dropped home sales. And then also strained affordability with the high interest rates. And some existing home sales lost to a push out effect, meaning that there were people that were waiting for home prices and or interest rates to drop who were not buying. So you had all those factors come together, which is why you saw that big drop off in the pink box for home sales during those years. And then the blue box that you see below there is kind of showing where the floor is, where there will always be sales made up with the Ds, meaning the housing Ds are death, divorce, debt. Those are the things that are always going to be around, that people will always have to sell their house. So that gives you a floor for home sales. But it's interesting to see what happened over the pandemic, how many home sales were pulled forward, how many were lost in that pink area because of those reasons, and what that baseline is for people that will always buy and sell. Okay. If you have any questions about any of this, don't hesitate to reach out. If you have a home to sell, if you have interest in buying in East Tennessee or Knoxville, definitely reach out to us. We would love to help you. If you have questions about anything in particular about this data, or you have a question about some data on your specific property or something that you're looking at, don't hesitate to comment or reach out to us. Our contact information is below. This is Troy Stavros with Cornerstone Realty Associates here in Knoxville. I hope you're having a great day, and we'll see you again soon with another market update.